Yo, 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 can anyone hear me? Hey, y'all, if anyone is in the room right now, can you just type in the chat room as to the right of the video? Just type in the chat and let me know if you can hear me and see the screen. All right, cool. Let's just give it a couple minutes to, let some other people trickle in. I see there's only 4 or 5 people in here right now, so let's give it a few minutes before we dive in. In the meantime, I'm going to post on Twitter that we're starting. We'll get started. 5 out of 5, Fod says, whatever that means. We're going to assume that's good. Going live right now. Where is the YouTube link? Audio and visual, all good. Word. All right, good. All right. So what's going on? In the meantime, let's talk about something else while we get people in here. So what we're going to do tonight, guys, is I'm going to go. So I actually had a presentation and like a file I was going to use as a guide, but I think I accidentally deleted it last night. So I'm just going to wing this. But we're going to talk about, I got a lot of questions on Twitter about analyzing company fundamentals and kind of how to, like how to decide if a PR, for example, like a press release is, fluff or not. And, I started thinking about it, and I was going to do an analysis of like a couple of press releases. And, I think ultimately the best way to handle it is just to understand, in order to understand whether a PR is fluff or not, you really have to understand, what the company does and how they make their money. So instead of analyzing, a specific PR, I figured I'd show you how I analyze a company, to understand how they make their money, who their customers are, those kinds of things. And, that'll help you to understand the significance of some of these press releases. So as people are trickling in here, for anyone who doesn't know me, my name is Chris Zielinski. I run greenbartrading.com. I'm a full-time day trader, day/swing trader. So there's a good blog here if you guys are, aspiring traders and you need, some education or just want something interesting to read from someone who's, kind of been there and done it. Greenbartrading.com. There's my blog here. I also offer one-on-one mentoring services for anyone who's looking for help. So there's a bunch of different options that you can, do. But that's who I am. And so, I just wanted to kind of put together this weekly webinar thing. We're just talk for, 45 minutes or an hour or so, and give people an opportunity to ask questions and, just talk stocks. So tonight's topic is going to be on analyzing a company's 10K. So if anyone has questions throughout this process, what we'll do is just type them into the YouTube channel. Along the right-hand side of the video, there should be a chat box that you can either pop out, into a separate window or just type right in there. So any questions along the way, just type them in there. And then, if it's something quick, I'm not sure what the history is like on this, so I don't know how far back I can scroll. So I don't want to like lose questions along the way if we wait too long. So if it's something quick, I'll just answer it right away. If it's kind of distracting from the topic, then we'll wait until the end. Before the end, I'll just make sure that nobody has any additional questions. So, so let's dive in. First things first, you got to know how to find these 10Ks, right? So tonight's topic, like I said, is going to be on analyzing sort of, how a company makes their money. And in doing that, you'll be able to learn, whether the news that's coming out is positive news, negative news, or whatever the case might be. It helps to be able to interpret the news in a more meaningful way if you understand what the company does. So we're going to use an example tonight, something that's been, kind of in the news lately, this Ultra Petroleum Corp. This is a small cap oil and gas exploration company. And you guys, if you've been, following the markets, that, oil stocks have been, wild lately, right? So we have the oil and gas exploration stocks. They went on a pretty significant run here within the last couple of weeks. And so we had a lot of these, small cap oil stocks that squeezed, hundreds of percent, like this one, right? SDRL went from, $2 to almost $8 in, just a few days. So, how do you know, where a stock like UPL, right, goes from 36 cents to, $1.50 in 3 days? How do you know that a stock like this is not going to continue moving up, to $4 or $6 or $10? If you're going to short the stock, or if it's something like SDRL, right? How do you know that the stock is going to do this, and so that it's still a reasonable idea to go long, for a day trade, when the stock is up 400% in, just a few days. In order to do that, you really have to understand, what the company does. So that's what we're going to talk about tonight. I think it'll be hopefully, beneficial to everybody. So first things first, how do you find a 10K filing? Well, what is a 10K filing? So if you don't know what a 10K is, every year a company is required, publicly traded companies are required to file their annual report. And it's basically just a big report on everything that they've done for the year, everything that they see coming up for the following year. It contains, information about their business. It contains information about who their customers are, what products and services they sell, how they make their money, all those kinds of things. Anything you want to know about the company is going to be in the 10K, in the annual report. And so, it's a really good place to start. Even if you're like a long-term investor, it's a good place to start, looking for information and trying to understand what the company does, to see if it's a good long-term investment. And as far as day trading, just reading the most recent 10K or the 10Q, which is the quarterly report, will give you some idea of, where they stand currently. So how do you find these documents? So first things first, edgar.sec.gov, right, is the Edgar website. This is the electronic data gathering and aggregation something or other. It's an electronic repository for SEC filing. So anytime a publicly traded company has to file an SEC filing, they file it with Edgar. So all you do is go to edgar.sec.gov, click on company filings, and then over here in the fast search box, you can type in the ticker symbol, or if you don't get any results, in the fast search box, some of the lesser known companies or, OTC companies won't have a, they won't show up in the fast search. So you have to actually type in their company name over here. And then you got some more options as well. You can switch starts with or contains, whatever. So if you can't find it by using just the ticker or the central identifier key, use the company name itself. So we'll just put in UPL. And then over here on the left, you've got all of the filings, for the company. So SC13G, 8K, this is a current report. right? So everything that they file with the SEC has to have its own form, right? And so these are just different forms, right? Def 14A is a definitive proxy statement. S8, 10K, 10Q. And so if you don't know what these forms are, you literally just, go to Google and type in, what is an S8 form? There you go. Filing with the SEC that's used by a publicly traded company to register securities that will be offered to its employees via benefit or incentive plans. On the other hand, you have something like an S3 form. Register securities for companies that are based in the United States. So these are an S3 or an S4 would be for registering securities that can be sold to the public. So there's different types of forms for different purposes. And actually, if you go to the SEC, I think there's even an index. I've got it bookmarked. I don't know how I got to this, but there is an index, that has all the forms, and it gives you a little explanation of what they are. So just dig around if you don't know what they are. It's relatively easy to find the information. So what we're going to focus on tonight is the 10K. And so, you can just type in 10 dash, and this will give you all the 10Ks and the 10Qs. Right? So this is the annual report, and then 3 quarterly reports, right? So you have first quarter, second quarter, third quarter, and then the fourth quarter will be filed along with the annual report. And so you'll see that pattern, Q, 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 K, Q, 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 K. That's pretty standard for, every publicly traded company. Now, we're going to focus on the 10K. And so you've got, there's your filing, here's your formats, the description of what the filing is, and then the date that it was filed. So you can see 2016, right? This is going to be the 2015 annual report. And this one's going to be for the year 2014, and so on and so forth. Each year they file one. So there's 2 different views here. You've got the documents view, and then you've got the interactive data view. And I'll talk briefly about what the difference is between them. We'll start with the documents view. This might look a little daunting when you first get into it if you've never looked at these before, but basically all it is you have the first line item here is usually going to be the file itself, right? So this is going to be the actual 10K report. And you can see that in the description. Underneath the 10K, you've got, looks like 8 or 9 exhibits. And each one of these exhibits is going to be referenced at some point in the 10K, right? It might be a letter from their public accounting firm. It might be a press release that they issued to shareholders that they mentioned at some point in the 10K, just so they don't have to include all these items in the actual report. They file them as an exhibit, right? So then you can click on each exhibit and read it. This is a second amendment to some employment agreement, right, that they mentioned at some point in the 10K. So, that's how the documents view is laid out. So you've got the report itself, followed by a bunch of exhibits, and then it'll even break it down into any graphics, that are in the 10K. And then you've got the complete submission text file. And this is usually used by like an algo in order to, they'll read the text file, right? So it's got the actual, HTML code from the 10K. And so, algos and computer generated things can, computer applications can read this. So that's usually used for automated trading. It's not very useful for just reading it yourself. Then down at the bottom here, you have these XBRL instance documents. These are irrelevant for what you're going to be doing, but generally speaking, the XBRL documents just, again, they're used by algos. XBRL stands for Extensible Business Reporting Language. And this was a new thing that the SEC came up with in order to kind of standardize the format of the 10Ks, and actually of all SEC filings. And that's what gives us the interactive view. So the interactive data view, notice that, these only started in 2010, right? So 2010, before 2010, there was no XBRL. And so there's no, there was no standardized format for these filings. And so you just had to read the actual document. Whereas now, you click on interactive data, you're going to get this, which has, a nice clickable, way to kind of navigate through the 10K. Here's all their financial statements. Here's the notes to the financial statements. Personally, I just read the original, because I kind of know what I'm looking for anyway, and that's what we're going to cover. Once you know what you're looking for, it doesn't really matter, how you access it. But some people prefer this view a little bit more. So all that said, let's get into the actual document. So go to Edgar, type in the ticker symbol, filter for 10K or whatever filing you're looking for. If it's 10Q, 8K, it doesn't make any difference, right? Just that's how you filter for it. And then click on documents. Once you get to documents, hit that first link. And there you go. So now we're into the 10K. So biggest thing to understand with the 10K is that there's a lot of boilerplate stuff in here. There's a lot of information that's just going to be included in all 10Ks by all publicly traded companies, just because that's what the SEC requires, right? So you don't necessarily need to read the entire thing, but I would recommend if you're new to analyzing these kinds of documents that you at least fully read a couple of them. Even if you read them out of order, just skip around and make sure you actually read in detail what these sections are, because it's important to understand how the documents are laid out, because that's how you're going to pick out the subtle differences between one company filing a 10K and then filing another one that has like a very slight change to it that could be material the next year. So every 10K for the most part is going to be laid out into what are called these different items. And you can see these are long documents, right? This is 118 pages long. So it takes a while to go through this stuff, right? It's not a quick process to read these things, but they're all laid out into these different items. And so these are going to be fairly standardized for, for most companies. There's a couple of subtle differences, like for example, oil and gas and mining corporations will have this mine safety disclosure where they're required by the SEC to disclose any safety or health issues, that result from their mining operations, or, the safety of their mines or the safety of their properties. So that's specific to the oil and gas industry, right? So you're going to have certain things, that are specific to the industry that you're trading in. But for the most part, right, business, risk factors, properties, legal proceedings, these things are all, required by all companies. And so the items will be pretty much the same for every company. Now, just a quick aside, since we're going through, a lot of information tonight, if you don't know, what these things mean, the SEC actually has a document on how to read a 10K. And it'll explain what all these things are. So just go to Google, type in how to read a 10K, and then it'll explain what each item is, right? So business, risk factors, unresolved staff comments, and so on and so forth. This is these are the definitions of what these things actually are. So, read through this. It's not very long, just understand what these different sections are. We'll talk about it a little bit tonight anyway, but just so you know, there are other resources out there that can help you learn this stuff. So in digging through the 10K, the first thing that I like to do is I want to understand how the company makes their money. I want to understand who their customers are, what their business is like, and all that stuff is going to be contained in the business section, right? So the business section, it will literally just tell you everything about the business. Ultra Petroleum Corp is an independent oil and gas company engaged in the development, production, operation, exploration, and acquisition of oil and natural gas properties. Duh, right? It's an oil and gas exploration company. Tells you when it was incorporated, November 14th, 1979, under the laws of the province of British Columbia, Canada. So it was originally a Canadian company. As of right now, I think they were acquired by somebody else, and now it's a US-based company or something like that. Or maybe they moved, I don't know. But Finviz says that they're based in the US. So who knows, right? I guess if you read this in great detail, maybe you could, or like go to their website and read like the history of the company or something like that, if you really care. It's probably irrelevant to the, for the purposes that we're, looking at. So it's an oil and gas exploration company. And I always read, a little bit of the business section just because I want to understand, how they make their money, who their customers are, what their business model is like, those types of things. And, so you can skim this, read through the headings, right? Here's an overview of their oil and gas properties. It talks about their principal operating areas, right? So operations in southwestern Wyoming have historically focused on developing its long life natural gas reserves. Sands of the Upper Cretaceous Lance Pool in the Pinedale and Jonah Fields, right? So this is literally like telling you, where their equipment is, where their mines are, where they're drilling their wells. So this is going to tell you everything that you need to know about the company. Now, I deliberately skipped over one section of the business item here because we're going to get to this later, but this item right here, liquidity and ability to continue as a going concern, this is an immediate red flag to me. And this is the type of thing that you want to look for. If you just read this one sentence, it will immediately give you, some reservations about, trading this company. Continued low oil and natural gas prices during 2015 have had a significant adverse impact on our business. And as a result of our financial condition, substantial doubt exists that we'll be able to continue as a going concern. So what that means is they're basically teetering on the edge of bankruptcy. Being a going concern is an accounting term that basically just means that you have enough money to fund your operations for some indefinite period of time, right? So if you got a bunch of cash in the bank, you can continue as a going concern for some indefinite period of time. Usually it's like at least a year, they want to say. But, when you see right off the bat, right, in business, in item one business, substantial doubt exists that we'll be able to continue as a going concern. That's alarming. And so immediately after that, right, we see, as of February 29th, 2016, the total outstanding principal amount of our debt obligations, right? $3.76 billion, and a little breakdown of, what their debt is like. So these are the kinds of things that you're looking for in the business section, right? This is going to show up in other areas as well, but, just understand the business section will tell you everything that there is to know about the business, so skim through this, make sure you look for those red flags. Particularly, you see a company talking about, having a doubt that they're going to be able to continue as a going concern. That's not a good sign. So, and it's as simple as literally just Control F, typing in, going concern. There you go. 70 matches, right, is obviously not good. So, you want to kind of flip through this and search for that type of language. So first thing I always do, like I said, is go through the business section. Second thing I do is I look at the risk factors. And in the risk factors section, it's going to tell you every risk that the company views, that could potentially be material to their results. So in this case, right, we have things like, we have significant indebtedness, right? We have a lot of debt, and substantial doubt exists that we're going to be able to continue as a going concern. So here's a breakdown of that risk. Why do they think that is a risk? Here's another one. So these are going to be, bolded or italicized or something like that, right? The actual risks that they view as, material are going to be bolded. And so you want to actually just kind of scan through these. You'll see that a lot of them are kind of boilerplate. As you read more and more of these 10Ks, so don't get too hung up on these, but, when you've read enough of them, you'll start to see, that little things stand out, right? This one, for example, well, that first one also, we have significant indebtedness. This is going to show up in basically every oil company because lots of oil companies have debt. If we go to Edgar and pull up, the results of any other oil company, I don't know, XDRL. This is a foreign one, actually. Let's look at something else. Let's look at OAS. Is this an oil company? I think they are. OAS and BAS. OAS. Yeah, independent oil and gas. All right, so independent oil and gas, 10K. First link, boom. Risk factors. Further declines, blah, blah, blah. Increased cost of capital. We may not be able to generate enough cash flow to meet our debt obligations. Okay, so there's obviously something about debt. Dun, 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 dun. Our level of indebtedness may increase or reduce our financial flexibility. I mean, some of these are like obvious, right? Like we have a lot of debt and therefore that might reduce how much money we can spend. Like, duh, that's going to happen with any company. Right. But you want to read the details of these because that's where you're going to find, the whether it's really a concern or whether it's just a boilerplate, risk. So, with a company like OAS, I haven't read this annual report personally, so I don't know specifically, what their situation is. But with UPL, I've read a good portion of this report, and it's a lot more negative than some of the other oil companies. There's not very many of them that are saying we may be unable to continue as a going concern. So this is what I'll do in the risk factors section. There was another one in here that I wanted to bring up. Acceleration is the word I'm looking for. Here we go. Yeah, so it actually was here. So the audit report that we received with respect to our year-end 2015, blah, 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 contains an explanatory paragraph expressing uncertainty as to our ability to continue as a going concern. Okay, so we know that. Our credit agreement requires us to deliver audited financial statements without a going concern qualification or exemption. As a result, unless we obtain a waiver of this requirement, we're going to be in default under our credit agreement after we deliver our financial statements to the lenders. And that's going to happen. We will be in default under the credit agreement on March 15th, 2016. All right. So not only do they have this inability to continue as a going concern, but because of that, their creditors can now come after them and say, as of March 15th, right, they're going to be in default under their credit agreements. And so then their creditors can come after them, and that can result in an acceleration of all our outstanding debt obligations. In other words, their creditors can come after them and say, hey, you guys are in default. You got to pay everything that you owe us right now. So this is obviously a very dire situation for this company. Number 3 here, there are covenants in our agreements governing our indebtedness. In many instances, a default under one of the agreements governing this indebtedness can result in a default under certain of our other indebtedness agreements, right? So if they default under one agreement, then that can result in a default under other agreements. So this is not good, right? So this is what I'll do in the risk factors section, just to, keep things brief. So read through the risk factors section, understand, what those risks actually are. Usually I'll just kind of skim through them. And at least read the headings. And then if it sounds like something that's alarming, I'll read the details. This is another bad one here. We have no borrowing capacity under our credit agreement. So over the periods presented in the accompanying financial statements, our growth has been funded through a combination of borrowings under the agreements governing our indebtedness, sale of assets, and cash flows. We currently have limited access to additional capital. We recently borrowed $266 million under our credit agreement, which represented substantially all of the remaining undrawn amount under our credit agreement. So We now know they are basically bankrupt. As of March 15th, 2016, they're going to be in default under one of their major credit agreements, and they have essentially a maxed out credit card, right? They don't have any more borrowing capabilities. So, that's obviously, it's a rough situation. So, there's a good chance based on this info, that this company is going to file for bankruptcy protection unless something drastic happens in the very near future. And they even say that right here. If we cannot obtain sufficient capital when needed, we will not be able to continue with our historical business strategy. And they even use the word bankruptcy in here a couple of times. We may seek protection from our creditors under Chapter 11 of the U.S. Bankruptcy Code. There you go, right? Page 26. That's in the risk factors section. If you see that, that's probably not a good long-term investment. I mean, I don't claim to be, a genius investment manager or anything, but, any company that says in their risk factors that they may file for bankruptcy protection does not seem like, the greatest long-term investment. So business section will tell you everything about the company itself, how they make their money, who their customers are, where their properties are, what their business model is like. Risk factors tells you all about what they believe to be risks, to their abilities to make money and abilities to execute on their business strategy. Then you have unresolved staff comments, right? This is basically any questions that the SEC has raised. Staff in this case is referring to SEC staff. So any questions that the SEC has raised that they haven't answered yet, they're required to disclose in this section. So usually it's going to be none. But if you do see something in there, obviously you want to look into it. Properties for oil and gas companies, this is going to have a description of where their properties are, the locations, so you've got Wyoming, Utah, Pennsylvania. Here's some of their oil and gas reserves. This is, information on some of their assets. Undeveloped resources. Here's their plans for developing those undeveloped resources, just referring to, undeveloped reserves. It's referring to, places where they believe that there are reserves there, but they haven't completed development yet. So they're not able to capitalize on those reserves. They're not able to physically get them out of the ground and, turn them into whatever they turn them into and sell them. So this development plan obviously is important because that represents potential future revenue. But this is in the property section. So information on their properties. Legal proceedings. This is another big one that I pay attention to. This will tell you, in this case, let's see, are there any major issues here? Well, it's not possible to determine or predict, blah, blah, blah. So the company believes that the resolution of all such pending or threatened litigation is not likely to have a material adverse effect on the company's financial position. So, that's okay. The reason that I pay attention to the legal proceedings is because, sometimes these companies get involved in lawsuits, and if they lose, it could have a material impact on their ability to continue with their business strategy. So if there are unresolved legal proceedings, you want to pay attention to what those are and understand them, understand when the, when the verdicts are due, so that you're not like swing trading these companies like right into a court case announcement where they lose, right? And then the stock tanks overnight or something like that. Legal proceedings is definitely an important section. So I definitely pay attention to that. Mine safety disclosures, like I said, this is specific to the oil and gas industry. None in this case. So no health or safety concerns with relation to their fields. The next major section that I pay attention to is the financial statements and supplementary data. And I'll kind of alternate back and forth here between item 6, which is the selected financial data, 7, management's discussion and analysis, also known as the MDNA. And then item 8, the financial statements and supplementary data. And so basically what I'm looking for, right, is a lot of people just start with the selected financial data, right? So they look at, here's their, their revenues, their expenses, right? So this is their income statement. And then you've got the balance sheet and so on and so forth, right? So some people will have, we'll just start here. And, often that's what I'll do as well. And what I want to look for is any kind of major outlier. For example, this $3.1 billion ceiling test and other impairments. Whenever I see a red flag like that, if there's just like a gigantic number somewhere that doesn't really look like it belongs, that's usually where you're going to find the information on what that is, right? And why it's there is going to be found in the financial statements and supplementary, the MDNA section, right? So the selected financial data will show you, the actual financial statements. But if you see something that looks out of the ordinary, like a very large number that shouldn't be there, or that's just come out of nowhere, right? If you see a big jump in accounts receivable, or you see a big jump in accounts payable, a large increase in debt, anything like that, big jumps in cash, anything like that will, show up on the financial statements. And the easiest way to identify, what's causing that is to go through the management's discussion and analysis of financial conditions, or the supplementary data, which is going to have the notes to the financial statements. So I definitely will, read these with a lot of detail. I don't do, a ton of, analysis in terms of the financials of the company for day trading purposes, and even short-term swing trading purposes, just because, the financials, they typically will take a much longer time period to be, to materialize into a price movement in the market. But if the company's teetering on the edge of bankruptcy, obviously you want to know about it. So the selected financial data is kind of where I start. And then if I notice any red flags, then I'll go into the other sections to figure out what they are. So we'll use that large goodwill ceiling test write down thing as an example. But before I do that, just want to show you, sometimes it's a bit easier to visualize these things on, a site like Yahoo Finance. If you just look at their income statement, like this, right? 2013 operating income of 372 million, 2014 operating income of 560 million, 2015 operating loss of 3 billion. All right, so obviously something changed from 2013 to 2014 to 2015. And the major, increase, right, is in this SG&A item. And so you could even break it down into the quarterly data, and see where that's coming from. So December 31st, 2015, $3.16 billion expense there in selling general administrative expenses. So this is the line item that you want to pay attention to. And in order to find that, in order to figure out what it is, that's where you're going to go to the 10K. So, this is the type of thing that you should be looking for. Okay, so looking into this line item, right? Ceiling test and other impairments. Easiest way, to figure out what's causing that is literally just Control F, ceiling test. You've got 5 of 32 matches here, so we're on number 5. So just kind of flip through these things. Write down of oil and gas properties. Looks like it's the next one. Companies that use the full cost method of accounting, right? And by the way, any of these terminology things that you don't understand, companies that use the full cost method of accounting for oil and gas exploration. I had no idea what that meant when I first started doing this. And so all I did is just go to Google and type in what is the full cost method of accounting? And it's relatively easy to get this information if you just, look for it. So anyway, they're required to perform a ceiling test calculation each quarter. So this explains sort of what it is. The ceiling test is an impairment test described by the SEC regulation, blah, blah, blah. It's performed quarterly on a country-by-country basis, utilizing the average of prices in effect the first day of the month. Dun, 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 dun. So here we go. The ceiling limits such pooled costs to the aggregate of the present value of future net revenues attributable to proved crude oil and natural gas reserves discounted at 10%, plus the lower of the cost or market value of the unproved properties less any taxes. If such capitalized costs exceed the ceiling, the company records a write-down to the extent of such excess, yada, yada, yada. So basically what this means is that they had some oil and gas properties that they thought were worth some amount of money, and over the course of several years, right, they haven't developed them yet or whatever, those things lose value because the cost of oil has dropped, right? The price of oil has dropped. And so in order to account for that drop in the price of oil, those reserves are not worth as much as they were when they first got them. And so during 2015, the company recorded a $3.1 billion non-cash write-down of the carrying value of the company's proved oil and gas properties as a result of that test. So you can dig more into this, but that's basically what this is. They're accounting for the fact that they're proved oil and gas properties. In other words, oil and gas properties that they know have oil in them, but they might not have actually gotten to it yet. They may not have developed them yet. They're not actually using them yet. Those things have dropped because the value of, a barrel of oil has dropped. And so they're accounting for that by taking this $3.1 billion write down. So that's a significant thing, right? $3.1 billion is not, chump change. And there's a lot of oil and gas companies that have seen those. So if you look at some of these other ones, you'll see similar things. OAS, I think, had a large write down. It wasn't OAS. Was it EPE? EPE, $4.3 billion non-recurring expense, right? That's an oil and gas write down. What was another one? SDRL maybe? Nope. They're actually, I always forget these guys are technically foreign. BAS. No write downs here. I'm just coming up with oil names out of my bootay here. Well, anyway, you get the idea. So, that's what that line item is. Now, where was that? That was, in this case, it was actually selected financial data. Sometimes what you'll see is there'll be like a little superscript number right next to the line item. And then underneath the table, there will be a little note that tells you exactly what it is. So if you look at like, I don't know, oops, that's not what I wanted. Look at like Apple's 10Q or 10K. Let's find an example here. So like this, right? Level 1, 1, right? And then there's a little note underneath it. So sometimes the explanation will be right underneath it, but other times you're going to need to dig for it a little bit. So that's what I'm getting out of the selected financial data section. Let me get rid of some of these tabs here. Get tabs out the wazoo. All right. So selected financial data, that's what I'm getting out of it. I'm looking for red flags. I'm looking for large outliers. And then I'm digging through the management's discussion and analysis and the notes, which we'll get into in just a second, in order to figure out what those are, what those line items are. So also in the management's discussion and analysis, this is an important section. I would definitely recommend that you read it in its entirety. This is going to be an explanation of their liquidity, meaning how much cash they have, how much debt they have, when that debt is due, what payments they have coming up, what relationships they have that are current, what relationships they have that are expiring, contracts, those types of things. All that stuff is discussed in the MDNA. And so it's really important to read this entire section, in my opinion. You'll find things even here like critical accounting policies. Not only how, what are their numbers, but how are they arriving at their numbers? With that $3.1 billion write-down, how did they get there? How did they calculate, $3.1 billion as opposed to 3.5 billion or 2.5 billion? That type of information is going to be contained in the MD&A or in the notes to the financial statements. Definitely important to read this stuff. Here's an explanation of the full cost method of accounting that we mentioned earlier. So we're just looking at, this is only one company, obviously, just an oil company, but the process is basically the same for any other company. The other thing that you'll find often in the MD&A section is how they recognize their revenue. And also if any revenue recognition policies have changed, in the near future, in the recent past, which can be an indication that maybe the company is trying to push, revenue into the current quarter at the expense of future quarters, right? In order to pump up their earnings numbers or something along those lines. So, looking for those types of changes is going to be found in the MD&A section. Asset retirement obligation, deferred financing costs, right? So it's a lot of the stuff is kind of boring to read. But once you've read a few of them, you're going to see a lot of it is just boilerplate stuff. You can skip over some of it. But I recommend, like I said, that you read, the entire report, and at the very least, right, the entire MD&A section and the notes to the financial statements, because this is where all the guts are, right? This is the stuff they're not going to tell you in the press releases. So very important to read this stuff. Here's, again, your results of operations. Operating costs and expenses. It literally will break down, what the expenses are. Liquids gathering system operating lease expense, right? So by lease, this is how much this particular lease costs. This is how much this particular piece of equipment costs. Here's the ceiling test write-down. The company recorded a $3.1 billion write-down of the carrying value of its proved oil and natural gas properties as a result of ceiling test limitations. The ceiling test was calculated based on the average of the quoted market prices in effect on the first day of the month, blah, blah, blah. Henry Hub natural gas and WTI oil adjusted for market differentials. The write-down reduced earnings in the grace period, reduced earnings in the period and will result in a lower DD&A in future periods. That's depletion, depreciation, and amortization. They did not have any write-downs to the full cost ceiling limitation during the prior year. So this explains kind of how they arrived at that number and what effect it's going to have on future periods, just to give you an example of, what kind of info you're going to find in here. So this is the MD&A section. You can see just by kind of skimming through this, we're already at page 61, right? So you're already halfway through the document. Once you've kind of looked at them, looked at a few of them, it's really not that difficult, to kind of skim through these things and look for the red flags. But it's going to take some time, obviously, to dig through the first few. Contractual obligations. So this is interesting, right? The following table summarizes our contractual obligations as of December 31st. $3.39 billion in total long-term debt, and then see note number 5, which is going to be down at the bottom here. I'll show you in a second. Here's your interest payments, so on and so forth. So this table is actually telling you, when this debt is due, and so if you look at, for example, a company like DNR, they had a similar type of move to UPL just recently. Right, the stock went from $1 to $3.75 or so. Right, so huge increase, 300, 400%. Right, but if you read their annual report, what you find is that, yeah, they have a lot of debt. On the surface, these companies look pretty similar. The DNR, key statistics. $12 million in cash, $3.36 billion in debt. So, you know, on the surface, it looks bad. And if you compare that to UPL, $25 million in cash, $3.41 billion in debt. So, right, they look like they're both about to kind of teeter off the edge, you know, into bankruptcy protection. But the difference is UPL's long-term debt is all due within less than 1 year. So, you know, that's a significant thing, right? They need cash like now. Whereas DNR, if you read their annual report, they didn't have like the majority of their debt, like, I don't know, they had what, $3.3 billion of debt. Yeah, 3.36 billion. If I remember right, like 3.2 billion of that was not due for like, you know, 8 to 10 years. So, you know, that's not nearly as dire a situation as something like UPL. And you're going to find that in the MDNA. Okay. So now we get into item 8, financial statements and supplementary data. The supplementary data is really what you should be paying attention to. So, you know, if you read these opening paragraphs, you know, you'll kind of find what each individual section is. Like, it's very, you know, explained as like, you know, explained like on 5, right? It's relatively simple. So I won't do all of that, but what you really want to pay attention to is the supplementary data, the notes to the statements, right? So here's your consolidated statement of operations. So this is your income statement. Here's your balance sheet. Here's your shareholders' equity. And here's your statement of cash flows, right? So you've got 4 statements. And then you have these, the notes to the consolidated financial statements. So this is what you should really pay attention to in here. You know, read the financial statements, but, you know, there's a lot more stuff, in my opinion, that you're going to get out of reading the notes, you know, than you're going to get just by looking at the numbers. So note number 1, significant accounting policies. What's note number 2? Most of these are pretty much the same. Asset retirement obligations. I mean, they're going to be, what I mean by they're the same is the majority of them are going to be, you know, similar for each company. They're going to have similar note headings, I guess. Asset retirement obligations, some info on their oil and gas properties, property, plant, and equipment, right? So that property, plant, and equipment, PP&E line item on the balance sheet, you know, here's a breakdown of what it actually is. Computer equipment, office equipment, leasehold improvements, land, you know, so tells you exactly what those numbers are. Here's your debt and other long-term liabilities. You know, you're going to want to read this in great detail in order to determine, you know, what their current cash needs are and what their cash flow needs are. Maturities, right? Here's information on when their debt is going to be maturing. In other words, when their payments are due. Number 6, share-based compensation. You know, so you can kind of dig through these financial statement notes. Derivative financial instruments. This is kind of interesting here. Realized gain on commodity derivatives, right? So they're, in order to combat falling oil prices, right, they're trading in oil derivatives. So they're actually making investments in oil derivatives like futures contracts or options or whatever, right? And so they're going to have realized gains and losses on those. Some of these companies, you know, they have, like, on the surface, the numbers look good, but they've been trading in these derivatives and they have, like, you know, billions of dollars of unrealized losses in their derivatives. You know, in what they're doing as basically a hedge for falling oil prices. You know, and so that's never a good situation, right? If you've got tons of unrealized losses on your investments, that information is going to be found in the notes to the financial statements. And they're not going to put that type of stuff in a press release. You're going to have to read the filings in order to get it. So I think that covers a good majority of, what's in here. So as just kind of an overarching theme, what I like to do with the 10Ks is to first get an understanding of how the company makes their money, what their risks are, if they're involved in any major lawsuits, and then I want to dig deeply into their financial information and find out how much debt they have, how much cash they have, what their ability is to borrow money, and when those debt obligations are due. Because those are going to give you, that's going to give you the information on like the immediate future. Other things you can look at, directors, executive officers, and corporate governance. You can read about the management. You can read about how that management is compensated, whether they're getting big bonuses, if the company is going to be on the hook for a lot of bonuses, what those goals are that the management needs to meet in order to get their bonuses. A PR might come out, right, that says that, I don't know, some big deal was done, right? It's going to bring in a whole bunch of revenue, but they're not going to tell you that by signing that deal, the CEO is now getting, a $50 million bonus. They're not going to put that in the PR. So that type of stuff will show up in here. Controls and procedures also can be somewhat interesting sometimes. This is where you'll find any changes to the significant accounting policies. So if they change their revenue recognition, or if they were in non-compliance with like Sarbanes-Oxley or anything like that, they're required to disclose that stuff in this section. So don't get, I guess, too involved really in this. It's not going to affect the majority of trades, but for me, I like to understand what the company does. I like to understand where they stand in terms of their finances. And it doesn't really, it's not going to necessarily affect your, a day trade. But if you understand, that the company is, just a big POS, right? It's a big bankrupt piece of crap. Then it adds a little bit of credibility to anytime the stock gets pumped up by some fluffy press release. You're going to be able to interpret that a lot better. Make a decision as to whether it's a long or a short. So, a lot of times you guys will see me posting on Twitter, that I'm short some company, right? There's some positive news out on it or whatever, and I'm shorting it for some reason. Some people might not understand the reasons why I'm short biased. And it's usually because I've done a lot of research on the company itself, and I know, what the PR means. I know, what significance it has. So all that said, this is how I analyze 10Ks. It's probably the longest, actually, it definitely is the longest financial report, the longest SEC filing for sure. Some of these things are 300 pages. So it does take a long time to analyze them, but, they'd only come out once a year, right? So you have to do it once a year. And in the meantime, you can analyze the quarterly reports, which are much shorter. It's going to be a similar type of situation with the quarterly reports. So, I personally, I pay attention to all of them, but the 10K is definitely, where a lot of information is. So here's Apple's 10Q, for example, is 45 pages long, and same type of deal, right? Financial statements, MDNA, controls and procedures, legal proceedings, risk factors, yada, yada, right? So most of these things are not going to change, but, you want to read them from time to time to make sure that the company is not, trying to pull a fast one on you, slipping little things into the notes in the financial statements or little changes to their revenue recognition policies and things like that. Especially if you're long-term investing, this stuff is very, very important. For day trading, not so much. So let's leave it at that for now. If you have any questions, definitely, throw them into the chat here. And let's get them answered. It can be questions about the 10K, questions about anything. It doesn't really matter if you just want to look at charts or whatnot. So one person here is saying, do you take the 10K into consideration for intraday trading? Not really. I mean, with UPL I did, for example, I was short UPL. And the only reason that I was shorting UPL, above $1 is because I knew that they're pretty much, they have a high likelihood of going bankrupt, unless something drastic happens. So, for a stock to go from 36 cents to a high of $1.54 in 3 days, that's ridiculous, regardless of if the company is struggling. But if the company's struggling, it's even more ridiculous because clearly, nothing has happened in the last 3 days, to make this company go up 300 or 400%. The value of the company has not changed in the last 3 days by 300 or 400%. So, just fundamentally speaking, it doesn't make any sense. And so if there's any, since this was a sector run, right, since all the oil stocks did this, SDRL, DNR, right, up multiple hundreds of percent, this one, same thing, right? Since they all did that, right, there were easy shorts out there, across the board. But for me, I dug into the financials. I dug into the ones, that I liked the most in terms of the chart and found out which ones were, the most, like the weakest companies, I guess. And UPL was one of the ones that I found that was very weak. So hence the short bias on it. It'll be actually really interesting to see. Tuesday is when they're going to be in default, unless something changes. So we should probably see a press release from these guys at some point next week, explaining what their situation is. I don't know if they're going to, announce that they are seeking bankruptcy protection, or if they're going to announce that they talked to their creditors and they've extended their credit agreement, or reached some kind of compromise with their creditors, or whatever the case might be. But, there's a good chance that there's going to be a PR for this company, probably next week, if not maybe the week after. I'm not sure what their schedule is like for releasing that type of stuff, or if they even will, tell you. Maybe they'll just slip it in like, an 8K or something like that. Who knows? But we shall find out. So hopefully that answers your question. So no, I don't really take it into consideration that much for intraday trading. With UPL, I did though. Anything else? Just gonna give it a couple more minutes to see if anyone has any other questions. Looks like it's pretty quiet out there. Everyone fell asleep. Oh, here we go. If a stock is moving intraday, do you quickly skim through financial statements to do a day trade if you've never read their 10Ks? Not sure what you mean. Gabrielle, what do you mean by that? Like, do I quickly skim through their financial statements to do a day trade if I've never read their 10Ks? Like, do I just look at their financials quickly? If that's what you're asking, then usually yes. Yeah, I mean, usually, I don't know if there's like a delay or what with this live stream, but yeah, usually if it's a day trade, I'll quickly check how much cash they have, how much cash they have, how much debt they have, and then just look at their income statement, See if they're making money, look at their balance sheet, see if, they have more assets than liabilities, and then, see if they have positive operating cash flow. Like, all I'm really trying to do in terms of day trading is decide if the company makes money or not. But it's not a huge, that doesn't necessarily matter for a day trade. So yeah, I will look at it. But it's more just to give myself credibility for an idea that I already had, just to add juice to my idea. So yeah, I guess so. Tyler, are earnings reports the same thing? The same thing as analyzing a 10K, you mean? I mean, sort of. What's a company that's released earnings recently? Let's look at it. Let's go to the screener here. Let's find something that released earnings recently and take a look at it. Earnings date. Let's just say yesterday. Well, duh, none. Previous week. American Eagle, maybe. I don't know. We'll just pick one that's well known. So American Eagle, March 2nd after market close. So that was American Eagle's tops Q4 earnings estimates misses on revenues. Yeah, so I mean, I'm just kind of looking at the same types of things. Usually I'll just quickly read the press release. What I'm paying attention to in terms of earnings releases is net income. I don't necessarily care about revenues. There's a lot of companies out there, especially the companies that are very pumpy, like Live Deal, AVXL, some of these small cap biotech companies and, small cap tech companies. They can be a little bit shady. And what I've noticed a lot with them is that they'll put out a press release and the headline will be Live Deal grows revenues by 400%. And then if you read through the actual press release, you see that, yeah, they might have grown their revenues by 400%, but they also grew their expenses by 400%. So in the end, they still lost money. So that's the type of thing that you want to pay attention to with the press releases. So I pay attention to net income more so than revenues. But that's just because, I'm a day trader. Or a day trader and a short-term swing trader. I don't, necessarily, that stuff's not going to, really affect my trading that much. And I'm not really looking in terms of long-term outlook. So, a company that increases their revenues, maybe from a long-term perspective, that's good because you're expecting them to flip those revenues to positive net income within the next, say, 5 years or something like that. But, from my perspective, I just want to know, did they make money this time? So AEO, 3.2% rise in quarterly revenue. Company's net income rose to 81.7 million. So they're profitable, up from 61.6 million. Net revenue rose to 1.1 billion from 1.07 million, right? So there's just a quick analysis. 3.2% rise in quarterly revenue, and yes, positive net income, right? So if they beat and they're profitable, then it's generally, might be a positive thing. DG, recent earnings, let's look at theirs also. Dollar General, the dollar store. Why do they, right? Everything costs $1. So March 10th, good Lord, look at all these press releases. So record fourth quarter and full year 2015 financial results. increases quarterly cash dividend. This was on the 10th. What actually happened to their stock? Yeah, so I mean, look at the stock. Boom. So full year net sales increased 7.7%. Net sales increased 2.2%. 13% EPS growth. And raise their quarterly dividend. So, you know, those are the headings. Obviously, you want to read the whole thing. Company's net income for the 2015 fourth quarter was $376 million. So profitable compared to net income of $355 million for 2014 in the fourth quarter. So they are profitable. What else do we have in here? Full year 2015 net sales. You know, they'll have other things in here like gross profit rate, right? 31% of sales. So gross margins, you know, the changes in those types of things can be interesting sometimes, even if the numbers on the surface don't look that good. You know, increasing the margins can be just as positive. So yeah, I mean, this is a much longer release. I'm obviously not going to dig through all of this right now, but on the surface, you know, in my 30-second analysis, they increased their quarterly cash dividend. They're a profitable company, and you know their net sales are increasing healthily. So accordingly, stock gaps up and runs. Now, whether that is worth a jump from 74 to 84 bucks, I don't know. I'd have to read in much more detail, read their annual report, you know, or, you know, dig into the quarterly report or something along those lines. So, by the way, side note, whenever they report their earnings, edgar.sec.gov, click on company filings, throw in DG, and here is their, have they not filed their most recent 10Q? This one was on the 3rd of December. So here's an 8K. Results of operations. So this is just a press release. It looks like they haven't actually submitted the 10Q to the SEC yet. So within the next couple of days, the 10Q should actually show up in the SEC database. So you can dig into it and read, you know, all 100 pages of it or whatever if you want to. So, all right, what else we got here? What's your method in searching for tickers? That's kind of a generic question. What do you mean? Depends on a lot of different things. FOD, percentage-wise, how would you divide yourself, fundamental trader versus technical trader? I'd probably, like, at this point, I would say like 80-20 technical versus fundamental. So I don't pay attention to fundamentals that much. I do pay attention to them a lot more than I used to. All of my ideas, for the most part, still come from the chart, you know, from the technical chart. But, you know, I do pay attention to the fundamentals a lot more than I used to. Thoughts on gold miners and its rise in the past couple months? Continued movement to the upside or reversal? Nugget in particular. Let's take a look. Disclaimer, I know nothing about gold, but I know something about charts. I mean, Nugget has been going hard as hell here for the last couple months. You know, so to me, you know, I think this is due for a pullback, but it's also extremely volatile up here. I mean, even these like what look like tiny little days have like, it's got like a $7 range in one day, you know, so it's really tough to tell. Back here, it was easy to trade this thing because, you know, it was very tight risk. So, you know, if you caught this thing down here, it was much easier, you know, to manage the risk on it. at this point, you know, I don't know if they're going to continue going up. I would say, you know, just looking at gold in general, looking at the gold ETF, at least the one that I follow, right? GDX, from 12.5 to 21 in just a couple of months. Like, that's a big move for gold. The way I would look at it is, you know, if you think the S&P 500 is going to continue going up, then I would say gold likely goes down, because the way I always looked at it is people rotate out of the S&P 500, you know, out of equities and into something with a physical asset. So out of equities and into gold as the market goes down. You know, so historically speaking, I would say, you know, if you think that the S&P is going to keep going up, then that would indicate that, you know, something like Nugget would probably turn down. But it's going to be a longer term move. I mean, these things are nearly impossible to predict in my experience. That's why I'm a day trader and a short-term swing trader. What else? Anything else? Cool. Make sure I got everyone. Earnings reports, we talked about those. Take the 10K into consideration. Yep, we talked about that. Skillets, what do you mean? So what do I think about the S&P? Do I think it's going to go up or down? Is that what you're asking? I think we're due for a pullback. I mean, there's a lot of damage done to this market. Then again, I always think everything's a pullback, so who knows? I mean, strong support, obviously, at the 180 area. But, you know, we also are in kind of this no man's land here, right under the 200-day moving average. I think the question is going to be, you know, if the S&P can break over and hold above the 200-day moving average, you know, but at the very least, right, we got to consolidate sideways for a little bit. Even if it does go over the 200-day here, you know, up into this like 202 to 207 range, I think we at least need to move sideways for a while and then have a breakout in order to really confirm, you know, that this kind of volatile turmoil is over, you know, so we can go to new highs. But I don't know, man. I mean, look at like a monthly chart of the S&P. Pull up a monthly here. I mean, I don't know. You tell me. Would you buy a stock if it looked like this? We're kind of like that 180 level is really significant. We get under 180, the next stop is probably 160. You know, but that'd be in my opinion, a healthy pullback. Right now, we're just kind of in that like, you know, chop zone at the top. We had the same thing over here and the same thing over here. You know, we just get into this like volatile back and forth, and then it's either going to make a decision and go up or down. So, you know, time will tell. But from a monthly perspective, I still think, you know, we could have some downside. Yeah, Tyler, I'm going to do these weekly. We just got to come up with, you know, different subjects to talk about every week. I might run out of subjects, so we'll see. But yeah, I plan on doing these every week. All right, cool. So let's leave it at that for now. I'm going to go and do some scanning. If y'all have any questions after the fact, feel free to shoot me an email, info@greenbartrading.com. Oh, I got one more question here. Fudd, can you quickly go over drawing trend lines on intraday charts to determine entries? Sure, I will do my best. I mean, I'm just basically looking for a best fit line. You know, whenever I do support or resistance, I'm just looking for a best fit line. You know, so anywhere I can connect the most points, you know, is going to be the most significant. So something like this, you know, I would take this line, right? Because you've got 1, 2, 3, 4, 5, 6, 7 tests versus this line, right? Because you've only got 1, 2, 3, right? So I'm looking for the best fit line. You know, and this is on a daily chart, but the same is true for intraday charts as well. You know, I'm going to take, I don't know, I guess technically this one would be like, so this was a little like minor trend break right here. And then it kind of picked the trend back up. But, you know, this is an indication, right, that maybe the bottom is coming soon. And it was in this case. You know, so from an intraday perspective, right, you see this trend downwards and then it broke above it, then resumed the trend and had like one last shakeout, you know, to get everybody else out. And then bang, bang, there you go. Right. So if you see this ahead of time, you know, that's a good indicator. Does that answer your question? I know it's kind of a vague answer, but, you know, drawing trend lines on a chart is kind of like, you know, the entirety of being a trader. So any last questions? By the way, is the screen like really blurry for you guys or is it clear? Because on the one that I'm watching, it's like super blurry. Hopefully it'll be better in the recording. Yeah, Fad, I mean, that's the thing. Sometimes it's going to work and sometimes it doesn't. That's why you have to, you know, manage the risk. Yeah. That's actually, is it on HT? Oh, it's currently set on 240p. It's just because I'm streaming at the same time. Okay. Gotcha. Yeah, it might just be because I'm streaming at the same time, but hopefully it'll be better in the recording. So if you, I'll go back and watch it afterwards, you know, and make sure that it's good. I don't know, I might need to upgrade my upload speed or something like that. But in the meantime, hopefully this is good. Word. All right. Cool. Thanks for coming, guys. And like I said, if you have any questions, just drop me a line, info@greenbartrading.com, or hit me up on Twitter, CKC8780. Leave a comment on the video here. I don't care. Do whatever you got to do to get in contact with me. If you want to talk about mentoring, you want to talk about, you know, ideas for trades, you want to talk about charts, whatever you want to talk about. You want to talk about life and relationships, send me an email. We'll talk about life and relationships. Yes, Tyler, it will be posted on YouTube. It should be live actually as soon as I'm done. I think it just takes like a little bit of time to process. I've actually never used this Hangouts on Air thing before, so this is an experiment for me. So we'll see. Cool. All right, guys, I am out of here, and we'll see you next week. Later.